Welcome to my channel. Please like, comment and subscribe. What is gap insurance and how does it work? If your car gets totaled or stolen, the last thing you want to hear is that you owe more than on the car loan that the car is worth. If you have collision or a comprehensive coverage, your car insurance company will pay the value of your car in a total loss settlement. Not what you owe on a car loan or lease, but if you owe more than your car, then what is worth. Gap insurance can help bridge that gap. What is gap insurance? Gap insurance is optional auto insurance coverage that helps bridge the gap for drivers whose car loan balance is more than what their vehicle is worth if it is totaled. And then how does gap insurance work? If your vehicle is totaled in a situation covered by collision or comprehensive insurance, the maximum claim payout from your insurer is the value of the vehicle right before the incident. Gap insurance, sometimes called loan and lease coverage, covers the difference between what you owe and the value of your totaled or stolen vehicle. Here's how a typical gap insurance claim works. If your car gets stolen or totaled in an accident covered by your car insurance, you make a claim on either the collision or comprehensive insurance portion of your policy, whichever coverage applies. Your car insurance company pays you the actual cash value (ACV) of your car minus your deductible. For example, if your car is worth $17,000 and you have 500 deductible, your insurance payment would be $16,500. If you owe more than on your loan or lease, then the insurance payout for the value of your car, gap insurance will pay the difference. For example, if you owe $20,000 and the ACV is $17,000, your gap insurance will pay $3,000. If you do not have a gap insurance and the outstanding balance of your loan or lease is more than your car's value, you will be responsible for paying off the loan yourself. Some lenders or leasing companies might require you to carry gap insurance. That is because it helps protect them from buyers who walk away from a loan or lease if the car is totaled or stolen. Some gap insurer might cover you for the total loan balance, including negative equity rolled into your new car loan. For example, if you trade in a car on which you owe more than it is worth, that negative equity is rolled into your loan. However, not all gap insurance policies will cover negative equity, so make sure you buy a policy that does if you roll negative equity into your new car loan. The next is what doesn't gap insurance cover? Here are some common expense gap insurance does not cover. Your car insurance deductible, overdue payments, and late fees on your car loan or lease security deposits, extended warranties, carry-over balances from previous loans and leases, lease penalties for high mileage or excessive use, charges for credit insurance connected to a loan, a down payment for a new car. And then, do I need a gap insurance? Whether you need a gap insurance depends on how much you have left on your car loan or lease and what the vehicle is worth. Gap insurance may make sense if you lease your car. You took out a car loan over 5 years, 60 months, or longer. You financed most of the car and made a small down payment of your car of less than 20%. You rolled negative equity from your last car loan into your new car loan. Make sure you get a policy that covers negative equity. You bought a vehicle that depreciated in value faster than other vehicles. More on that below. If you currently have a car loan or lease, you can compare the value of your car on a website such as an ADA cards to your car loan or lease balance. The difference between the two is the gap. Gap insurance may not make sense if the amount you owe is less than the car's value, or only a little more. You can afford to pay the difference between the amount owed and the car's value yourself. Once the amount you owe is less than your car's value, or only a little more, There is no reason to keep a gap insurance. That is because there will be little or no gap insurance payout possible. For example, if you owe 15,000 US dollar and your car's ACV is 17,000 US dollar, there will not be a gap if your car is totaled or stolen. And if you sell your car, you should cancel your gap insurance. Where can I buy gap insurance? You can typically buy gap insurance from a car insurance companies, car dealership, banks and credit unions, insurance companies that sell gap insurance, many car insurance companies that offer gap insurance such as Allstate, Auto Owners, Array, Nationwide Travelers. Not every car insurance company sells gap insurance and it may not be available in every state. For example, Geico and Farmers do not sell gap insurance. And then cost of gap insurance. Gap insurance adds an average of 60 US dollar per year to your annual car insurance cost, according to Forbes Advisor analysis of a gap insurance cost at large insurance companies. And when you no longer need a gap insurance because your loan balance is about equal to or lower than your vehicle value, you can drop it from your policy. Gap insurance is much cheaper through a car insurance company compared to a car dealership. Buying a gap insurance from a car dealership might seem convenient, but it can often end up costing you more in the long run. Car dealerships typically charge up to 600 US dollar for gap insurance, according to Trusted Choice, a group of independent insurance agents. The cost of a gap insurance could be rolled into your car loan, but that means you'll also be paying interest on it. You'll also be lose the flexibility to cancel your gap insurance since it is tied to your loan, meaning you might end up paying for something that's no longer useful. Alternatives to gap insurance. Some car insurance companies offer other types of coverage that sound familiar to gap insurance. Here are two alternatives to gap insurance that might interest you. New car replacement coverage. New car replacement coverage reimburses you enough to replace your totaled or stolen vehicle with a new car. If you have this coverage, the insurance company reimburses you enough to replace your new vehicle rather than give you the vehicle's actual cash value, which factors in depreciation. The vehicle must meet age and mileage requirements in order to take advantage of a new car replacement coverage. It is generally a deductible attached to a new car replacement coverage. Here are examples of companies that offer this coverage. Amica's new car replacement coverage is part of its Platinum Choice Auto package. The new car replacement coverage for Amica replaces a total vehicle with a new car if it is under a year old and has fewer than 15,000 miles on it. And then Farmers offer new car replacement coverage for a vehicle of the same make and made if your car gets totaled within the first 2 model years and 24,000 miles. Nationwide provides new car replacement for a vehicle less than 3 years old. As you can see, new car replacement coverage varies significantly by company, so make sure to read the fine print and understand exactly what you are getting if you want new car replacement protection. Better car replacement coverage. Some car insurance companies such as Horace Mann, Liberty Mutual offer better car replacement coverage. This reimburses you for a newer or better model of the total car. This coverage may have mileage requirements. Liberty Mutual's better car replacement reimburses policyholders for a car that's 1 model year newer and with 15,000 fewer miles. Here's an example. Let's say 2020 car with 30,000 miles on its get total. This coverage would provide reimbursement for the policyholder to get a 2021 model of the same car with 15,000 miles on it. I think that's all guys, information that I can say to you. Thank you so much guys for watching, and if you need information related to insurance topic, you are in the right channel because in this channel we talk about it a lot. And then don't forget to share this video to your friends, family and your loved one. By sharing this video, you will let them know that in this channel we provide a lot of information related to insurance topic, which is very helpful for those who need it. Thank you so much for watching. Don't forget to give like, comment, and subscribe. Bye bye guys, see you in another video.